A lot of people believe that brokerage apps are free. You'll see phrases like commission-free trading or no trading fees. And that leads to a very common question. If trading is free, how do brokers make money? The short answer is they always do. Not in a shady way, but in ways that aren't always obvious to beginners. Understanding this matters because it helps you see why brokerage apps are designed the way they are. Let's start with the most important idea. Brokers are not charities, they are businesses. Their job is to give you access to the market, and their goal is to make money doing it. One common way brokers make money is through something called the spread. Every stock or ETF has two prices: the price someone is willing to buy at and the price someone is willing to sell at. The small difference between those two prices is called the spread. Sometimes that difference is tiny. Sometimes it's larger. When you place a trade, you don't usually notice this difference, but it exists. Over thousands or millions of trades, those small differences add up. Another way brokers make money is through order routing. When you place a trade, your broker decides where to send that order. In some cases, brokers are compensated for sending orders to certain market makers. This does not mean you're being cheated, but it does mean free trading doesn't mean no revenue. The broker is still being paid behind the scenes. Now let's talk about cash. If you have money sitting in your brokerage account that isn't invested, that cash doesn't just sit there doing nothing. The broker can earn interest on it. You might earn a small amount or sometimes none at all while the broker earns more. Again, this isn't hidden. It's just not something beginners think about. Another source of revenue is premium features. Some brokerage apps offer advanced data, research tools, or faster information for a monthly fee. You don't need these features to invest successfully, but they exist because some users pay for them. Then there are margin loans. Some apps allow users to borrow money to invest more than they actually have. Interest is charged on that borrowed money. This is a major revenue source for brokers and also a major risk for beginners. Borrowing amplifies gains, but it also amplifies losses. That's why understanding how brokers make money is also about understanding what behaviors they encourage. This leads to something important. Brokerage apps are designed to encourage activity. More trades, more engagement, more features used. Bright colors, notifications, trending lists. All of that exists because active users are more profitable users. But investing does not reward constant action. In fact, overtrading is one of the most common reasons beginners underperform. Knowing how brokers make money doesn't mean you shouldn't use them. It just means you should understand the incentives. The broker's goal is to keep you active. Your goal is to make thoughtful decisions. Those two goals are not always the same. Once you understand that, you stop feeling pressured by the app. You realize you don't need to react to every alert, every movement, or every headline. You start using the broker as a tool, not a guide, not a signal, just a tool. And that awareness alone puts you ahead of most beginners.